Crypto regulations in 2025. A quick overview what's changing and why this is so important for everyone. Crypto regulations is exploding in 2025 with surges with up 308% in game-changing policies reshaping the market. Will these new rules make you rich or wipe you out? Stay tuned to find out what's changing and why it matters. Watch this video till the end to get the full picture. Crypto regulation is the hottest topic in 2025, with search volume skyrocketing 308% according to recent data. From pro-crypto US policies to global trends discussed by Davos 2025, new rules are changing how we invest, trade and innovate. In this video, I'll break down what's happening, why it matters and how you can stay ahead of it. Why is crypto regulation such a big deal in 2025? Cryptocurrencies like Bitcoin and Ethereum are no longer fringe, they're mainstream, with a global market cap of 3.18 trillion US dollars as of February 2025, per Analytics Insight. Governments want to protect consumers, prevent fraud and stabilize markets without stifling innovation. At Davos 2025, experts highlighted that 93% of financial stability board members plan new or renew crypto frameworks this year. The US is leading the charge, driven by a new pro-crypto administration. For example, take stablecoins like USDT, which handled 30 trillion in payment volume last year. A 300% jump according to Davos. So regulators are zooming in because stablecoins are becoming a backbone of digital finance. But their growth raises risks like money laundering and systematic instability. So let's start with the US, where a crypto-friendly shift is shaking things up. Here's what's changing in 2025. First, pro-crypto executive order. In January 2025, President Trump signed the Strengthening American Leadership in Digital Financial Technology order, banning central bank digital currencies, CBDCs, and promoting private stablecoins. This reverses years of regulation by enforcement and aims to make the US a crypto hub. Second, SEC's new approach. The SEC, under new leadership, relaunched its crypto task force led by Hester Pierce. It's pausing high-profile lawsuits like one against Binance to focus on clear guidelines for token registration and compliance. This could unlock billions in industrial investments. Third, stablecoin regulation. The Genius Act, signed in July 2025, sets new rules for stablecoin issuers, requiring strict transparency and reserves. This boosts confidence but demands compliance, with 60% of stablecoin issuers already adapting, per PwC's 2025 report. Third, tax and AML rules. The IRS tightening crypto tax reporting, with penalties up to 70% for undisclosed gains. New rules mandate identity verification for transactions over $3,000 US, impacting exchanges and wallets. Example, look at Coinbase. After years of battling the SEC, it's now working with the crypto task force to streamline compliance, potentially saving millions in legal costs and paving the way for new products like tokenized stocks. But it's not just the USA. Global trends are reshaping crypto too. Here's what Davos 2025 revealed. First, EU's MiCA framework. The EU's markets in crypto assets MiCA regulation, fully effective in 2025, sets strict licensing and reserve rules for crypto firms. It's driving a shift to Euro-backed stablecoins, with Binance delisting non-compliant tokens like USDT for EU users. Second, Asia's leadership. Hong Kong and Singapore are crypto hubs, with licensing regimes balancing innovation and customer protection. Singapore's clear tax incentives attracted Binance, while Hong Kong's stablecoin rules boosted adoption. Third, global coordination. The OECD's crypto asset reporting framework is being adopted by countries like Australia and Switzerland to track cross-border transactions, reducing tax evasion. By 2026, 88% of FSB members aim to align with global stablecoin standards. Third, real-world adoption. Davos highlighted tokenization of assets like real estate and commodities, with firms like Franklin Templeton running crypto pilots for 50% of Fortune 500 companies. Example, in Singapore, a tokenized real estate platform launched in 2025 lets investors buy fractional property shares for as little as $100, showing how regulations can unlock new markets. Why this matters and how to navigate it. So why should you care? These regulations impact your wallet. Clear rules attract institutional money, potentially pushing Bitcoin past $150,000 by 2026 per market analysts. But stricter compliance means higher cost for exchanges, which could raise fees for traders. Here's how to stay ahead. Research compliance. Use platforms like CoinGecko to check if your exchange meets new licensing rules. Track taxes. Tools like Coinly can help report crypto gains to avoid IRS penalties. Diversify. Spread investments across regulated assets like Bitcoin, Ethereum, and compliant stablecoins. Stay tuned, follow news from Davos and regulators to catch market movement updates. That's the scoop on crypto regulations in 2025. From US polity shifts to global trends at Davos. These changes are reshaping crypto's future. Will they fuel the next bull run or slow it down? Tell me your thoughts in the comments. If you found this video helpful, smash that like button, subscribe and hit the bell for more crypto insights. Till then, see you in the next video.